Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis. If you're new to the channel, welcome, and if you're returning, welcome back. You can skip to your favorite currency pairs. The currency pairs are timestamped in the description box below, as well as the chart analysis that I'm going to be going over on the major currency pairs. So just a bit of fundamentals for this week. And maybe a bit of sentiment also mixed in here is coming up for the week. So something that you definitely should be aware of is what's happening. So what really is going to be catalyst to drive the market. So next week we've got the FOMC meeting, keenly watched, along the US jobs report, ISM manufacturing, PMI, pending home sales, and the final Michigan consumer sentiment. Elsewhere you've got the UK market manufacturing PMI, Eurozone quarter growth, that's going to be quite big as well, and China PMIs, which is probably going to be quite big as well. PMIs, producer manufacturing index, and depending on what that is, it gives an indication of inflation. So investors will also react to US-China trade talks and UK parliamentary vote on Brexit Plan B, and that is what is really driving the pound this last week and into this week. And if there is any signs of a no-deal Brexit being taken off the table, Article 50 said that, I think it's by March the 29th. If there is no, it's either we have a deal, or if by March 29th, if there's no deal, then basically the UK leaves with no deal. But Theresa May is trying to take that, and certain members of parliament are trying to take that off the table. So it's either they want to remain or a bad deal, or Theresa May's deal. Not necessarily into politics, but the basically the market is reacting to the fact that I say the market, but the pound is reacting to the fact that if there's less likelihood of the UK leaving the euro and on a hard Brexit, or what they would call a hard Brexit or a no-deal Brexit, it's positive. The market's taking that as a positive for the pound. So the market is driven by sentiment and fundamentals, not technicals. We just use technical analysis to derive potential value, which is what supply and demand zones are, and from there we put some other things together, and we try and time our entries. So fundamentally that's what's going on, and you can also see what's happening when the time's obviously on Forex Factory. Don't forget, if you want to learn about fundamentals and put an extra edge onto your trading, right? Because what I do every day, look at the fundamentals, look at sentiment, and decide which currency pair I want to buy and which one I want to sell, right? Watch the course, lots of good tips in here, and you can understand really how to derive currency value. And also got a fundamental analysis spreadsheet, right? Click on there, it takes you to the screen, and this just gives you the my fundamental bias, not necessarily sentiment bias, a fundamental bias on each currency pair. So it makes it easier for me and you to decide which currencies you want to be buying, which ones you want to be selling, and maybe which ones you want to be staying away from. And remember, a bullish versus a bearish currency, you tend to get trends, right? So Japanese yen versus the something like the US dollar, you tend to get a trending market when fundamentals are in play, risk on, and usually neutral versus a neutral pair, you'll tend to get what they would call ranging markets or price acceptance, right? So sideways market, but also you've got sentiment that comes into play. So the Japanese yen and the Swiss franc are safe haven currencies, so they will benefit from a risk off environment, basically meaning that when the market is in a bit of turmoil and there's a lot of uncertainty going on, there is sentiment plays, and Japanese yen and the Swiss franc will benefit from that. But all things being equal, the fundamentals risk on is where I usually want to start trading, but you have to be aware of sentiment plays. And markets don't go up forever, markets don't go down forever. There's profit taking, there's short squeezes, and things like that. So yeah, this should help you. And if you have any questions regarding fundamentals, just email me or leave a comment in the section box below, and I will endeavor to get back to you as soon as possible. But what you're here for, what everyone usually is online, is the technical analysis. So let's get into the technicals. All right, let's get into the technicals. And we start off, as we normally do, on Dow Jones Dollar Index. And the Dow Jones Dollar Index is a measure of dollar strength against the major currencies like the pound, the euro, and the yen, right? And what we're looking for, again, when we're looking at supply and demand, is areas of value. So in the past, demand zones and supply zones were considered areas of, bargain, right? Or they were considered an expensive area, right? So prices have come down into this demand zone here for the Dow Jones Dollar Index, right? Now, what we have is, in October, it was considered a bargain. In November the 8th, it was considered, the 7th, it was considered a bargain. And now, January, it was considered a buying opportunity. Now, with demand zones, what happens is that the more times the level is touched, the weaker it becomes, because that price now becomes quite normal, right, for everybody to see. This is where we really want to take advantage. The more times it touches, the more times prices come to this level. It's like going to the shop and you see a great discount on an item that hasn't been discounted for forever. Basically, you wanna go and buy, right? But the more it gets discounted, the more it becomes normal to everybody, and this is where retail traders end up getting in. You wanna try and get in at fresher levels of demand, which is around here. That's not to say that this couldn't have worked. It's just that the more times the level gets touched, is the less likely it is to hold and to work, right? Unless you do definitely believe that the dollar index is undervalued around here, and it was to a certain extent. But I think that the dollar, some negative sentiments coming in, and I think this is going to be the area which to potentially look for some more buying opportunities. And you wouldn't buy the Dow Jones Dollar Index, you would just wait for buying opportunities on all the other dollar currency pairs. That's not to say that prices couldn't turn around here straight away, into Monday, Tuesday, but I expect, they're not necessarily forecasting, but I expect probably in the lead up to FOMC for prices to probably get weaker and come down here. And again, depending on what FOMC produces, if it's good number, etc., and other dollar news, then you could see probably some weakness come in, and then if it's positive news, some strength within this area. And once you see dollar start turning up after the news, right, then you want to potentially get long on dollar crosses. Now, if you're looking to short the dollar, right, then what you're looking for is for prices to really come back into this zone here. And what I'm going to do is probably just extend this slightly down here, right? It's for prices to probably come anywhere up into this zone, and then look for any shorting opportunities. And again, once this starts to turn around, if this starts to put in some bearish price action, then you go into dollar yen, dollar Swiss, and look for confluence on those Forex pairs, and then look to short the dollar. So keep an eye on the dollar index when you're trading the dollar crosses. Now on to the dollar yen. So dollar yen this week, we've pretty much just gone sideways. And in fact, let's go back to some charts that we analyzed from last week. So this is what we saw last week, Sunday, press plate, and we've literally just gone sideways for the next couple of days. And I think for last week anyway. So I think what's happening is that the market is obviously waiting for some sort of catalyst, whether it's going to be positive or negative for the dollar. We have no idea. So what we want to do is probably end up waiting until prices come down here, looking for some price action. And again, if we got some go back into the dollar index. If prices do start to come down here and then start to turn up, bullish price action, then that would correlate with this. Again, prices go higher, and then they would correlate with that supply zone, right? So that's what you're looking for. A lot of the new guys who are watching this video will be wondering what the purple areas are for, and they correlate to determining the supply and demand order equation at levels. So what we want to do is, it's not just necessarily value we're looking at, right? From a daily time frame perspective, we're looking at where are going to be more supply or where there are going to be more demand orders. So what we do is, a lot of traders, in fact probably 99% of traders, are looking at horizontal, diagonal, or especially horizontal support and resistance. They also look at diagonal support and resistance, and dynamic support and resistance, which are moving averages, 21, 50, 100 and 200 EMAs and SMAs. So if you are looking to, for example, get short within this area, then what you would do is, when prices do come into this area here, this supply zone, an area of potential value for the Japanese yen, then what you would do is, if you're looking to trade on the daily time frame or any lower time frame, is look for areas where people will be either entering new positions, right, which is going to be willing supply, right? Because if you're going to enter short, you have to press sell, which is supply orders. If you're looking to take profit, let's say for example traders who bought around here, and if you're looking to exit their trades, where are they going to exit their trades? At potential problem areas. And what traders will do is look to the left to see where prices have reacted in the past, right? And then they will expect price to react there, right? So if they bought here, then they're going to be exiting here, taking profit here, which is selling, right? Or potentially here selling, which is also sell, right? Sell orders, which is supply. And the question you always have to ask yourself is why, right? Why is there going to be more demand or supply orders at an area within supply and demand, support and resistance? And again, take into account diagonal support and resistance, right? And then you take into account dynamic support and resistance. So we'd look at the 100 and the 200, which basically aligns up here, right? And then we also look at the 21 and the 50, right? So the 50 is coming within this zone. So traders, you look at the 50 moving average, EMAs and SMAs are going to be looking at probably the first touch and the first cross after prices have crossed below the 50 moving average. And also look for some complements here. So you've got some horizontal resistance, you've also got dynamic resistance here as well, right? And again, traders' motives at this area, whether they'd be taking profit or looking to actually get short as well within this whole area of supply. Now, what could scupper this trade is basically, like I say, fundamentals and sentiment, right? That's what moves the market. Just because you see price action react here doesn't mean it's necessarily going to react if prices do come up here, right? And then there's brilliant news, positive news and positive sentiment for the dollar, and there's negative sentiment for the Japanese yen, right? Just because you see a pin bar here does not mean that you should be getting short, right? Look at the fundamentals, because prices will end up going and carrying on straight through this area, right? If there's positive news for the dollar and negative news for the Japanese yen, and that's really the icing on the cake, right? That is, the difference between just technical analysis and applying technical analysis and really understanding, fundamentals and sentiment, right? Not every level is a level that you should be taking, right? And then all you would do is just wait for, buying opportunities and demand zones to, take advantage of an uptrend, pullbacks, etc., right? So those are your options this week, and I think it's probably safe to wait for FOMC to come out. If you are going to enter pre-FOMC, I would say reduce your risk size, maybe go for half or a quarter position and see what happens. But as of now, there's really no trade between this supply or this demand zone. Moving on to the dollar Swiss. Again, dollar Swiss, we have reacted, right, to this area of supply. In fact, let's just go back to last week's chart. So last week's chart, right, to show you that there are levels. So we came up into the supply zone, and now we've obviously reacted, right. Within this level, you can see prices start to turn around. So looking at the charts, let's drag this across. Let's get rid of the moving averages for now, right? So this would have been your opportunity to get short a nice outside candle, one of my favorite entry candles. Not to say I'm buying the Swiss franc, but it's definitely a nice daily candle. And then obviously we're off to the races to the downside now. Again, we don't know what's going to happen this week. Wait for the news. If you are looking to buy the dollar, right, look for some dollar strength. Either you're going to be waiting for price to come all the way down here before looking to buy, and I do like this level. For those of you who've been watching the channel, this is what we call probably a retracement CPR, and this is a breakout CPR, but I'll go into some more detail about the breakout CPR location in probably in a later video this week. Maybe not on this pair, but I'll find some examples. If I can't, then I'll do it on this pair. But this is the first area you want to look for a buying opportunity for the dollar. And if prices are positive, then what you would wait for is prices to break higher, then prices to come back, because this would create what we would know as a demand zone, and then you'd be looking for buying opportunities within this area, right? So sell trades. Let's see if I can add any other horizontal support and resistance, or resistance within that supply zone. I'd probably say traders would be looking at this area here, within that area, as you've had resistance, touch there, bit of resistance here, and then we've had which looks like a stop hunt, and then prices have made their way, you know, down. So again, this would be what would be considered a breakout CPR location zone, right? And again, just watch the YouTube channel for the last couple videos, and it really kind of breaks down what CPR location zones are, and it just adds to the supply and demand equation from a losing trader psychology perspective, right? So those are really the zones at the moment. Dollar CAD. Now dollar CAD, we did bounce off of this last week. Let's go to the dollar CAD. So this is last week's candle formations, and where we had reacted from. We made a move higher, and then a bit of a move down. This was a decent entry from the week before. Outside candle, probably definitely hit a 1-to-1, depending on where you put your stop loss. But it would have hit probably a 1-to-1 if we were with a tighter stop. And now we're coming back down into this demand zone, right? So potentially there is a buying opportunity right here. Again, just depends on what happens with the dollar and the CAD as well. When trading the CAD, you've got to look at oil. If oil is on the rise, then that benefits the Canadian dollar. We've got a demand zone, sorry, supply zone right here. Supply. And within that supply zone, we can see that we've got a bit of support and resistance where traders would have been looking at this area, right? So we've got resistance, bit of resistance there, bit of support and resistance, then we've got resistance there. So not only do we have supply, nice supply that's come in, and it's taking out a level of potential demand. In fact, it's just closed below that level, so I'd say that's a level of demand, and it's taking it out. So if prices do come back up into this area here. This is where you want to be looking to short if you're looking to buy the CAD of the first area. If not, it's again way up here. If you're looking to buy right now, then now would be probably the time, right? Or around here. And again, you've got some diagonal support from this long-term trend line. So if prices do actually come all the way down to this area here, you've got the confluence of horizontal, diagonal, and then let's look for, I don't think we're going to have any kind of dynamic. Oh, yes, we do, matter of fact, from the longer term ones. We've got the 200 MAs, and from the shorter term ones, which was basically the ones I was thinking about, that we've got the prices reacting off of those MAs right up there. But you're looking for the longer term ones, right, where you've had it react 100, and I think the 200 would be the one to probably look for as well. But again, enter short, yes, small positions if you're looking to look to trade right now. And if not, then you'd be looking for areas around here. Also, what you can do is zoom in right to a 4-hour chart, which I regularly do, and look for maybe a cuter entry, right, if you want to. So let me just take that off. And if you want more of an accurate, more accurate zones, right, within maybe the 4-hour or whatever time frame that you do trade on, right, look for areas. So you've got resistance, bit of support here. So if prices do end up coming down, that could be another level where you'd be looking for buying opportunities as well, right, depending on your time frame, etc. Also be aware of round numbers, as prices do tend to react around certain round numbers as well, and half numbers. So again, it's all just adding to the supply and demand equation, right? You've got forced willing demand, who's taking profit, who's entering new positions, what are the fundamentals, what's the sentiment around certain areas, and price, right? So this is what you're looking for, and this is what you've got to take into consideration whenever you are looking at trading levels of supply and demand. Now, so that's from a daily perspective. Yeah, buying and selling opportunities. Moving on to the New Zealand dollar, US dollar, and let's go to the chart. And this was, I think we had this week, we had some decent New Zealand dollar news. Well, basically, the news was regarding inflation. It wasn't fantastic, but the market sentiment, with the result of the inflation result, was that the New Zealand dollar and the I think the Reserve Bank of New Zealand were going to actually take high interest rate cuts off the table. So they could be holding interest rates rather than cutting them, right, due to inflation. So what happened this week was prices came down into this area, which has been marked. So support. This was an area of also demand first, and then supporting evidence. But you had prices react, and then when prices came down into this zone, right, you had demand here, you had horizontal support as well within this, and then you had the catalyst of the New Zealand dollar interest rate news. Now, starting off into the week, we are actually up into this area of supply, with also an area of horizontal resistance and dynamic resistance. So if we look at the charts, again, depending on sentiment, right, we could see prices react from here, right. I was actually in this trade from last week, right, and got stopped out for half a position. So I entered 2 positions. I reached the 1-to-1, moved my stop down to a half position once the New Zealand news came out, and then pretty much just got stopped out for half on Friday. So a little bit of profit off of that. I have a suspicion that prices will probably end up going higher as we continue into the week before FOMC. So I'm expecting prices to probably, it's going to be a demand, sorry, supply zone there. And let's see what candle this was. Yeah, that was a candle here. So you've got a bit of a supply, some supply zones right here, right? So I probably expect prices to come just above this this supply zone and around this area here, right? Maybe the 688, 69 level before looking to turn around if there's going to be any positive price fundamental or sentiment for the dollar. If not, then here's going to be the area that most traders are going to probably look to take profit at. Again, if we add an area of support and resistance within that area of supply, you can see that it was an area in the past, resistance, support, bit of resistance here, and now prices have reacted from here. I like this area from a technical analysis perspective to try not to get short, right? That's right, let me move that out the way. That was my target tool that I use. And so if prices do not react around here, prices continue to go higher, then I will look for any entries around these areas. Again, just keeping an eye on the fundamentals and sentiment, right? If you're looking to be a buyer, right, around here, probably say this is where your next demand zone is going to be. So if you're looking for a pullback, you're looking at that area there to look to get long. You can see from a support and resistance perspective, there was a bit of support turned into resistance around here, and then we've got a bit of support right there. So so yeah, that's pretty much what you've got there. And what I'm going to do is just to tidy this chart up a little bit, I'm going to take this this lower level off of demand, right, and just going to keep it probably like that for now, right? So moving on to the pound dollar. Pound dollar has been going from strength to strength, as I spoke about earlier in the video. There's definitely some positive sentiment going on. It's not anything to do with pound strength. I think it's just anticipation of potentially a no deal, right? No deal being taken off the table. So looking at this from a supply perspective, because I know a lot of traders will be looking to potentially short this, looking for shorting opportunity. We have supply within this area. We've also got other levels of supply slightly higher. We've got a bit of a level right here. So again, as we come up into this zone, you got to think to yourself and look to the left, is this a fresh area of supply? We've touched it once, call that 2 touches, potentially a decent area of supply, but you probably want to look for fresher areas if we do come up to just above maybe that 1.13 level and around here. If not, then definitely looking at this area as an absolute fresh level. And even though it happened in June, traders will be watching, that area. So let's have a look at any support and resistance around these areas. Traders will be interested in that area there, and then you probably got just above that. At the moment, I'm not going to try to fit, even though there is a bit of resistance there. Not necessarily the greatest. You've got support there, bit of resistance, bit of resistance there, bit of support there. Prices held for a little bit, and then prices resisted around here. So I'm happy with that for now. Might move that down slightly around here. So those are pretty much just sell opportunities. And again, you can always, you know, zoom down into a lower time frame if you don't see any kind of horizontal resistance within this area. On the daily time frame chart, you can look for, you know, 4 hourly, 1 hourly, etc. From a buying opportunity, from last week, again, I've done this a bit backwards. Right, this is what's happened. Obviously, you've seen it. So we've created higher highs and higher lows, and so obviously deleting these supply zones, and now we can add these demand zones here. Again, getting a bit clustered around these demand zones. So what I like to do is just probably just going to get rid of that there, and then we've got that demand zone right there. So if we're looking at any buying opportunities for the pound, you'd be looking at, and you want to take advantage of the, you know, the last kind of, you know, trend from December, right? You'd be looking at buying opportunities right here, and then any kind of buying opportunities within this demand zone. It's a bit choppy around here. I'm not really fond of this area, right? So we've got decent area around here. All right, I'm going to get rid of that and that for now. So I think those are your areas: support, resistance, bit of support within this, you know, sideways price action. But you can see where it has reacted from these areas and from this price area. So these are pretty much your areas to potentially look for long trades within this larger area of demand, and there's your areas to look to potentially get short. But again, just remember that if we're taking supply from, you know, it would have been this area here. We have touched it once, twice, right? So I don't know whether this is potentially going to hold, right? And again, we've touched it from probably from here as well once. So it's touched a few times, several times, this whole area, this 132 level. So again, if you're entering, just be sure that there is some positive news for the dollar, and probably negative. Watch for negative sentiment to come out, depending on what the market expects in the vote this week regarding Plan B on Brexit. Pound yen. Let's go to charts. So this is what we had last week, waiting for either a pullback to demand or a move up to supply, and we've made a move up to this area of supply. We did have a little tiny reaction here, but again, with positive sentiment surrounding the pound, it wasn't going to be you know, that's what I guess, prices weren't going to necessarily react from here to the downside. The yen is actually quite weak as well, right, from a fundamental perspective. Stock market's been rallying, so we have created a demand zone right here. In fact, we've got a hidden demand right there, and then we can delete that area here, and potentially, what candle was that? That was a negative candle. Then we can draw a bit of demand there as well. Yep. So we got demand in this area here. So again, looking for any kind of pullbacks. These are your first areas to look for long trades. Again, we have area here of support, again some support in that area, along with obviously value demand. We're looking at supply areas. You're probably looking at this level of supply. What I'm going to do is I'm going to just get rid of this for now. Clean up the charts and then look for areas of support and resistance. As you can see, where you've got an area here, and you've also got something around the higher areas as well. So those are the options for the pound yen. So again, just looking for any short trades around here, any buy trades if prices do pull back again around here, potentially around here. Euro dollar, and let's see what happened last week. Sorry, that was euro yen, euro dollar. Right, we did come down, and then we've reacted off of this lower demand zone. So we've had support as well within this large area of demand. Prices did react off of it, right? And we've come up into this area of hidden supply where we've managed to just stop here. Doesn't mean necessarily we're going to react from here or reverse. But this is what's happened last week. So going to the charts, what we have now, I'm going to move this area of demand just like that. Potentially we could have a sell trade obviously into Monday, but wait for the news. Well, that would be my thinking. Wait for the news before getting in short. So we're probably going to see prices come up into this supply zone before any kind of reversal. Now, depending on obviously what happens, there's also ECB, I think the press conference, if I'm not mistaken. Let me go back to Tradingview. No, it's Eurozone fourth quarter GDP. That was it. Then we could see again some bullishness continue, or again prices reverse. So I'd probably wait for the news to come out to really kind of reassess what it is I'm going to be buying or not buying. Right, I'm definitely going to be a buyer of the dollar. It's just basically what price I'm looking to get in. So we're looking for prices to probably come up to here at some point, and if not, then it would be probably this higher zone. Now, what I am going to do is I'm going to extend this level up to here as we've made lower highs and lower lows, and that was the last bullish candle before prices made lower lows, and this is pretty much the high. So I'm going to encompass all of this as a supply zone, and then this will be the first area within that supply zone. This will be the second area. We extend this over within this supply zone. So this is what I'm looking for within this area, and again you can extend that up as well. Again, just zoom down into lower time frames. Right, if prices do come up here, then you can see where there would be probably some support and resistance more accurately, and it is around this 1.149 to 1.15 level where you've got resistance. You've got resistance, bit of support there, resistance, etc. So there's some supply. There should be some supply within this area again from profit taking. If you bought down here, whether you're gonna potentially take profit around this area, right, and so on and so forth. If you're looking to enter a new position, forced and willing supply within this area. Again, don't forget to look for diagonal and dynamic if you do get it within that area. So let's have a quick look. Right, the 100, the 200 is coming down into this area, and then I think you've got the 21 and the 50 actually where we're at now. So I think that trade was already done. I think I'll just show you the opportunity. This was where there was an opportunity to get in short to the downside. So now it's just looking for potential short trades, but I think this would be the the better area if prices can get up here to take any short trades. But again, that depends on obviously euro news and dollar news. Right, next up we have euro yen. And the euro yen pretty much has done nothing for the past few weeks. It's just literally gone sideways, absolutely really no opportunities. And again, it's just like I said last week, looking at the euro yen, all you're looking for is supply and demand really to kind of prove themselves, right? At some point you're going to get and maybe the fourth quarter GDP will be the catalyst for this, a move up. And if we get a move up, then this is seen as a bargain area, a cheap area for the euro. Then what you'd look for is prices to actually come down into that area if they do, and then look for buying opportunities. Or we could see prices move down, and then what you would do is wait for prices to come back up into this area of supply before making any short trades. It's pretty simple, but pretty dead chart for me. Aussie dollar. Let's go to last week's chart. So we did have prices, react off of this demand zone here when it was way up here. Press play. We did get prices again react. Got a bit of a move below this demand zone and then a move higher. So if we go to the charts, clean this up a little bit. So what we've got is some demand here, right? And again, for any of you that have taken the course in real time, that would have been a supply zone, and then we've taken out supply. So what we're going to do is put this as a level of demand right here. We can extend, and I want to extend probably this level down to around here, supply zone. So we're looking at any sell trades now and probably any buy trades within this area. And what I'm going to do is I'm going to look to see if there's any support and resistance within that area of supply and demand. Yeah, I'm going to put that there. So we've had support, prices have reacted. You can see where it's kind of resistance, right? You've got a bit of resistance there, you've got some support here. So I'll delete that area here as it doesn't correspond and it's not within the area of value, because we always want to look for areas of value first, right? Supply and demand first, and then we look for forced and willing supply, right? Areas, and again, horizontal, diagonal, and dynamic support and resistance within areas of supply and demand. So as we come up into this area, we've got decent area, we've got diagonal resistance within this area as well as horizontal. So decent. Have we got any dynamic? Let's have a look. The 100, one of the 100s is also within this area. It's been touched, once, a few times, so still decent. I don't think we're going to have any. Oh, we do. At the moment, the 50, one of the 50s is just above it, capping price, but I probably expect prices to kind of just ignore that anyway. I expect prices to come up anywhere around here. If we're looking at any kind of short trades, if this area doesn't work out, then you'd be looking for prices to really come up into this area here. Before looking at short trades, looking at long trades again, if we're going down to a lower time frame chart, you're looking for prices to really come back down into this zone before looking at a buying opportunity, or you're looking at the lower area of here before looking for a buying opportunity. Lastly, we've got the Aussie yen. Again, we've just gone sideways from last week, as we can see, contained within this supply and demand zone right here. So again, potential shorting opportunity on the lower time frame, and if you're looking at long trades, you do kind of have a level, right? If you're looking at this being, it's moved off it quite accurately. Let's actually zoom in a little bit. Yeah, you've got a bit of support there, bit of resistance, bit of support, resistance, 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 and then you reacted off of it around here. So quite happy to put that level of support there. Just remember though that you are up into, if you're taking the low right to the high, and I know I don't talk about this much within the these weekly videos, but you got to look at where you are. If you're looking to be a buyer, right, this is demand, right? So this is obviously, it's a flash crash, but let's just assume that this was and we have to assume that this is demand, right? The algos didn't jump in, and this was actually real demand. So if there was a lot of buying, right, and you're looking to buy the Australian dollar, and this is selling, this is going to be an expensive area. So this is a bargain area, this is an expensive area for the Aussie dollar. This has to be fair value. 50% is the fair value area, right? And this is only providing you're buying, you're looking to buy the Australian dollar. This is fair value. Anything from fair value higher is, you know, more of an expensive area, right? So you're buying really at the highs. So when you're looking to, if you are looking to buy at this demand zone, right, just keep in mind that you are buying at an expensive area, right, until proven otherwise. So what you would need to see, or what I would need to see for me to kind of buy at this demand zone, is prices to move a lot higher, right? If they do move higher, then you'd move the value range a lot higher, and then now this looks like a more decent area to look for buying opportunities, because you're not necessarily buying at the highs, if that makes sense. You're buying more towards fair value. That's only providing you're buying the Australian dollar. If you're buying a Japanese yen, it's, you know, you do the opposite. But if you are buying a Japanese yen, let me just zoom out a little bit, right, then I would say that would be potentially the bargain area. And you've also got obviously another one right here as well, right, depending on which one you're looking at, but you can look at both. But this would be, supply zones would be a bargain area for the Japanese yen, right, because it was a bargain right here. This goes into a bit of training. I know this video's been going on for a bit of time, but this was a bargain area for Japanese yen, and we know that to be a fact because prices, you know, went lower, right? People are buying the Japanese yen over the Australian dollar. We've now come back up into this previous area of what was considered a bargain for the Japanese yen, and prices are reacting now. If you are looking to buy the yen, you are buying at a cheap area, or what could be considered a cheap area. So let me just get rid of this one. You're buying at the lows, that would be fair value, and that would be considered an expensive area for the Japanese yen, right? So highs and lows of ranges or potential ranges are considered bargain areas, along with obviously, you know, supply zones. So hopefully you understood that, but this would be a cheap area for the Japanese yen. Also, this pair is susceptible to risk on and risk off. So if you are buying the Japanese yen, you want to see the stock market selling off. You want to see gold as well increasing in value, right? So that would indicate, again, risk off environment, and the Japanese yen benefits from a risk off environment. Risk on stock market is bullish, right, and continues to push higher. And you know, you want to see maybe commodity currencies as well, like the New Zealand dollar and the Canadian dollar also increasing in strength as well, and that would increase the chances of prices going higher. But again, just keep in mind that you are buying at an expensive area on, or you're buying at highs pretty much on the Australian dollar. Wait for prices to go higher, then make wait for a pullback, and that's how you really kind of, you know, trend trade and range trade. So hopefully you've enjoyed that. That brings us to the end of this week's training. If you do have any questions, definitely leave them in the section box below. Don't forget to like, subscribe and share, and thank you as well to all the traders who watch this and are leaving, you know, great comments and kind comments, and stay tuned for more videos, especially a lot of you are liking the CPR capture pain relief location videos, so I will be introducing that into some trading videos as well, and it all ties into supply and demand. It's not just, you know, drop based rally, rally based drop, but you know, technical analysis that you know, traders typically associate with supply and demand. You're really thinking about not just, you know, from a value perspective, but you're thinking about from forced and willing supply. CPR, you're taking advantage of capture pain relief from losing traders and their motives to really break even, and it all adds to the supply and demand equation, right? It's more than just a technical chart, together with obviously value derived from fundamentals and sentiment, risk on and risk off. You've got yourself pretty much, you know, the total package. So I go into a lot more depth on the website and in the course as well, so you can definitely check that out. So guys, I hope you have a great trading week, and take care.